A very good morning to all my dear students. I know how excited you all are with your good morning wishes. You have proved that, how excited you are for today's revision. So welcome on behalf of Institute of Chartered Accountants of India for this revisionary class for CA Inter Law, chapter number 1, preliminary. So I hope you have learned the things. You are just here to revise it, but we'll try to thoroughly revise it so that your revision is done in the class now and final. All right. And at the end of the session, you can ask as many doubts as possible. But first, we'll quickly go through all the provisions. We'll be referring to the presentation as well as the study material. Also, I'm going to cover certain important questions that have come from the MTPs as well as your suggested answers. So welcome, dear students, to the live virtual revisionary. Good morning, all of you. Good morning, Swati, Kushi, Sia, Anjali, all of you children. Good morning. So as I always begin my session, you all know that hard work is the key to success. So you all have really done lots and lots of hard work, and now is the time to show it off. All right. So how do we show our hard work? When we are being consistent, we are making a proper study plan, we are revising, we are doing a writing practice. Now is the time, children. Exams are just approaching. So written practice is must. Many a times we think that I've learned so many provisions. How will I remember? How would I recall? But if you write things with your own hand, like today in my class, I'll be talking about n number of things. Say, for example, we are talking about certain definitions. I'm telling you about associate company. The moment you feel that, yes, I cannot recall, just scribble it with your pencil, whatever ma'am is telling you, so that quickly you can flip through your notes just the day before the exam. And trust me, children, writing really, really helps a lot. And again, it is one place where you tend to lose your marks. Because at times you think, I've done everything. I know everything. Now I've learned sections are on my tips. Everything has been done. But then to memorize it, when you ask about the memory game, you ask the techniques. So writing is one of the things that help you to retain it in your subconscious mind. And when the question paper comes in front of you, read the question twice. Twice, thrice, you should read the question. Try to understand what the examiner is asking from you. And then that retained information will come from your brain that, yes, I have written it somewhere in my notes. Now I can form a connection. Always try to form a connection between the question and what provision it is asking. And again, be consistent with your studies and examination questions, case laws, how you have to attempt. Write the provision first, then facts of the case, and then write your conclusion. Conclusion is must. Okay? You have been hearing this from other teachers also. Always we keep telling you, even in foundation, we have discussed this, that conclusion is must because conclusion carry marks. Don't think that I have written the provision, I've explained the facts. Fact is just a summary from the question paper. So you must write it. Okay, you have marks for each thing when you are attempting a case study based question. And now you are CA Inter students, you are going to be professionals soon. So you must write the case study answers in the proper format. All right, children. So Companies Act is something which all of you have been very familiar with by now because you have studied it also once and now we're going to revise it. So the major part of your Companies Act is covered in CA Inter. Sunil, Supraja, Abhishek, Khushbu, Pooja, all of you. Good morning, children. Good morning. So now, Companies Act as well as certain rules are there. So many times students keep asking, we have to learn the sections, we have to learn the rule numbers. So things that we keep doing repetitively again and again, when you keep listening, you keep talking about it, somehow it is again fed in your subconscious mind. So don't worry how to learn the sections, whether I will be able to retain. Everything happens. So Companies Act, you all know that earlier it was 1956. Now we follow 2013 Companies Act, which is the major act, and entire act of 1956 has been replaced. Company, what is a company? Company is an incorporated body. You all know it has a separate legal entity with perpetual succession and common seal. Common seal means the signatures of the company, how the company is going to function. It is going to function through the human agency behind it. That is the directors who are running the show and the shareholders who are part of the company. But the common seal is something which is very important because company is a separate legal entity. Its members are different and company is different from its members. All right. You all have done this very nicely. This is just a basic touch up of your CA foundation because the Companies Act starts from your CA foundation. So you know about the ultra vires, memorandum, articles. In preliminary, we typically talk about the definitions. So what is preliminary chapter? It typically tells you that the Companies Act 2013 under section 2 of the Companies Act, definitions have been given so that whenever you refer to these words in your Companies Act, you have to follow this meaning which has been given over here. So it has basically defined, it has given the meanings for your Companies Act, different points. So company can sue and be sued in its own name. It can buy, hold, and sell properties. It has perpetual succession, and company is created by the process of law and can be dissolved with the process of law. So this is section 1. So this chapter is divided in 2 parts. Section 1, a brief one-pager, and then section 2, we quickly jump to the definitions. Section 1 simply tells you what is the title. So it's a Companies Act 2015, the name that has been given. It extends to whole of India and it is applicable to overall all of India. Earlier it was that certain states were exempted. Now it is covering whole of India. Applicability of Companies Act. It is applicable to companies incorporated under this act or under any other previous company law. So even if there was any other company which was formed in 1956, to them also the Companies Act 2013 will be applicable. And then it is applicable to insurance companies, banking companies, electricity companies. Now, when it says that except where the said provisions are inconsistent, means how is the insurance companies being regulated? Insurance companies are generally being regulated by the respective act, that is Insurance Act. Banking companies are being regulated by Banking Regulation Act. Similarly, electricity company is being regulated by the Electricity Act. But overall, the compliance, the procedure, what they have to follow the Companies Act. But wherever the provisions are inconsistent means Companies Act is saying something else to the insurance company, Insurance Act is saying something else. In that case, they have to follow their respective act. So it says overall Companies Act is applicable to these companies, but where the provisions are inconsistent, in that case, Insurance Act, Banking Regulation, and respective Electricity Act will be applicable. So now, children, let's move to the definitions of section 2. The number 1 definition is your abridged prospectus. So what is abridged prospectus? Abridged prospectus, you must have done by now prospectus also because since it's your revisionary class. So abridged prospectus is something which we have a detailed discussion in the chapter of prospectus. But since the definition is given over here, you should know that it is a memorandum. Memorandum means basically a document. It is a document containing salient features of a prospectus. So abridged prospectus is a kind of a summary which is given. Entire prospectus, children, you know prospectus is around 400 to 500 pages. So your abridged prospectus is just a brief summary of your entire prospectus. So it is a memorandum, it is a document, 1 pager or few pages, would contain the silent features of the prospectus of a company. As specified by SEBI, so SEBI is a huge body. When we learn chapter prospectus, share capital and debentures, there we learn in detail about this kind of topics. Then accounting standards. Accounting standards are basically the standards set up by the Institute of Chartered Accountants in consultation with the National Financial Reporting Authority. So central government in consultation with ICAI and NFRA, that is NFRA body, National Financial Reporting Authority, they have framed certain standards that you have to follow while doing the accounting procedures for different companies. Basically, accounting standards are in order to maintain the uniformity between different companies. If there is A Limited, there is another company B Limited, they both are into manufacturing certain kind of manufacturing parts. So if they are into similar kind of business, so the comparison of the companies become easier. That is why certain accounting standards have been framed so that the accounting policies, procedures, whatever you are following for the companies shall be followed on the same kind of standards. Now, what is the meaning of alter? Alter karna means change karna. Alteration means changes. So it can be either additions, omissions, or substitutions. Either you are adding something to the law, or you're omitting, or you're substituting. The word given is alteration. Articles means articles of association as originally framed and altered from time. You all know what is articles of association? Articles, tell me, what is the meaning of articles of association? What do you understand by the word articles of association? You can use the chat box to answer the questions because it is your revision. You should be knowing these things now. Articles are the internal rules and regulations. Yes. All right. So you have studied about articles. It tells you the bylaws of the company. It tells you how the rules have to be framed and how the functioning has to be done. Very good. Very good. How the management will work. Very nice. Ayushri, Nagesh, Sia, all of you have given the correct answers. Pooja, very nice. All right. Now you're answering more of, you have written Abhishek Singh, Sunil, Swati. All right. Rules and regulations. Everybody's correct. That means you have been studying good. So now let's move to the definition of associate company. What is an associate company? Associate company is a company which has a significant influence on another company. What is the meaning of having a significant influence? Annotations are not here, Manisa. I just want to use the annotations, the pen over here. All right. So associate company is basically a company having a significant influence on another company, which is not a subsidiary, but it includes a joint venture. Now, what is the relationship of an associate company? Associate company means one company having a significant influence on another company. What is the meaning of the significant influence? It means that one company is trying to control at least 20% of the total voting power of another company. Sir, I would like to use the annotations, the pen in between. I can't see it. Manish sir, are you there? All right, children, let's try to understand because I can see the pen over here. Yes, less than 50%. Absolutely, Pooja, that's correct. So at least 20% of the shareholding has to be there in order to become the associate company. In order to have a relationship of associate company, one company should be holding 20% or more of the total voting power of another company. Why it is saying not a subsidiary? Because the moment you hold more than 50% of the share capital in another company, then the relationship of holding and subsidiary arises. So from 20% till 50%, it is a relationship of associate company. And also a joint venture. What is the meaning of joint venture? Joint venture means where the two companies are having a joint arrangement, having the contribution towards the joint net assets of the arrangement. If they're having a joint control over the A Limited and B Limited are controlling the net assets of certain company, then that means they have set up a joint venture together. They are also an associate company. Now it says fiduciary relationship is not counted between the joint, this associate company relationship. It will not count the fiduciary relationship. Fiduciary relationship means where a person is holding a relationship of trust between people. So if I am holding the shares of a company just as a being a trustee, so then another person who is a beneficiary, I'm just holding on behalf of them. So where this relationship of trustee and beneficiary, you're taking care of someone's money. You're taking care of the assets. Remember bailment, where I have given you gold of my house to take care because I'm traveling. So that means you're acting as a bailee. So fiduciary is also on the basis of a trust and beneficiary, where you're holding the things in the capacity of a trust and taking care of the shares of a company, then you will not be counted for the relationship of associate company. Is that correct? All right. So here is a question on the screen in front of you. ABC has allotted equity shares with voting rights to XYZ Limited, 15 crores and convertible preference shares worth 10 crores. After that, the total capital of the company is 100 crores. Now, what is the relationship? Can we say XYZ is an associate company? And if you say yes, you have to tell me why. Can we call XYZ Limited a associate company or not? Tell me, Joe. Read the question very carefully and then try to answer it. Can we call that it is an associate company? It is not even showing the option of whiteboard. No, it is not 20%. No, it is only 15%. Very good. Correct answers. Correct answers. Very nice. So now there are two type of answers. Excellent. Ayushri, Arinjan, Swati, Shankar, Shrishti, Satya. Let me see the students from the portal who have joined us. Tamanna, Bhumika, Devyanshi, Hemlata. Very good, children. Good morning, all of you also. And very correct answers you all have given. So this should have been a significant influence of holding at least 20% shareholding. So they are only holding 15% because we have said shares holding total voting power. So equity shares are the ones which are with the voting power. But children, you can say that if you have assumed that the convertible preference shares are also the one which are having voting rights, then you can say that it is overall 25%. Then they would have been associate company, but it is again an assumption. You can write this. Otherwise, also your 15% answer is also correct that it is less than 20%. Then it is not an associate company. Okay. Very good, Aditya, Yushri, Khushbu Verma, Kiran, Om. All of you have given the correct answers. Well done. Abhishek Singh. Yes, Abhishek Singh. So you can tell them if the preference shares are those which are having voting rights, then we will consider them the associate company because then the overall holding becomes 25%. Similarly, if I tell you that the allotted ABC has allotted equity shares with voting rights 15 crores and non-convertible debentures worth 40 crores and the total share capital is 100 crores and non-convertible debentures are 120. Now again, you have to tell me if the what is the meaning of associate company. So first you will define the meaning and then you have to tell me whether it is a relationship of associate companies existing or not. Yes or no and why. Yes, Aditya, you can write the assumption and provide both the answers. Then also it is correct. That is absolutely correct. So now the answer to the second problem I'm looking forward for. So convertible debentures, excellent. Satya Gupta is the first one to give the correct answers. So non-convertible debentures, it is just a mere information. You have to ignore. It has nothing to do with your associate company relationship. You will only see the equity relationship, that is 15%. Hence, allotment of non-convertible has no relevance for attaining the significant influence. So for significant influence, you only have to see the equity shareholding with voting right, which is less than 20%. Therefore, no is the correct answer. It is not an associate company. Mehek and Swati, you have also given the correct answers. Very good. So we just discussed about the accounting standards. Now we're going to talk about the auditing standards. So auditing standards, Pooja correct, Kiran correct, all of you are correct, Mehek correct, good. Central government has prescribed certain standards of auditing also. Like we have framed the standards for accounting, we have the, children, after becoming chartered accountants, you will be working as an auditor or an accountant or different fields. So when you go for the audit of the companies, you have to follow the practices, standard auditing standards practices while auditing different items or from the balance sheet and profit and loss account. So certain standards again have been set up for auditing. They are recommended by ICAI, but only in consultation and recommendation from National Financial Reporting Authority. They have been given the whole soul in charge of this. They will prescribe whether all these standards are correct. So this much definition, if it comes for 2 marks, then you can write this much definition. It's absolutely. Now let's talk about the classification of capital. Again, since definitions are given over there, authorized capital, issued capital, subscribed. So I thought let's do it in once in a full chart only. So there are different types of capitals. How you have to do about this is, okay. So nominal and authorized capital is your overall share capital, which is given in the memorandum of association. That is the maximum capital that the company is thinking of raising. And then out of that, what is the issued capital? Suppose 1 crore is the capital which the company has taken as authorized capital. This is the capital that the company is thinking that, okay, in the coming years, I'll be raising this capital. So it is just a mere imaginary figure that they have thought of raising the capital. But when they actually come to issuing and they issue the prospectus and the thinking of raising the money from the public, they have issued, say, for example, 50 lakh shares. So 5 lakh shares into at the rate of ₹10 each. So that is the issued capital, and public have subscribed also for the same. So now 5 lakh shares called up money. So if the rupees 10 per share, suppose they have called up rupees 8 per share. So you remember application, allotment, first call, second call. So whatever is the called up amount is known as your called up capital. And now what is the paid up capital? Out of the called up capital, when you deduct the arrears, say for example, you have called up rupees 8, but they have only paid rupees 6 per share. So your actual share capital, paid up share capital will be 5 lakh shares into rupees 6. Okay, so it'll 5 lakh shares at the rate of rupees 6. That will be your paid up capital. So it is not necessary that whatever how much has been issued subscribed. So your paid up capital will always be after the called up capital deducting the calls in ADs. So whenever you have to invest in any company, what kind of capital you have to see? You always have to see your paid up capital of a company in order to make your major decision of investment. You cannot open the memorandum and see the authorized capital. That is the maximum capital that the company is thinking of raising. But we issued and then subscribed, and then how much has been called up after deducting the arrears, that is your final paid up capital. Is that clear? Now let's talk about another important definition, children. It says about body corporate. So body corporate, what do you mean by body corporate? Is a company which is incorporated outside India, is it a body corporate? Yes or no? There is a company which is incorporated outside India. It is a foreign company. Can we call it a body corporate? Yes or no? Very good. Inder, Aranjay, Nagesh, Swati. Excellent, excellent. Om Prakash. Om Shri Om Gupta. Very nice. Ayushri. Kiran Mishra. Very good, children. It's a body corporate. Stuti. Very nice answers. So why it is a body corporate? Because law tells you, let me see over here, Divyanshi, you're correct. Bhumika, Hemlata, all of you are correct. Tamanna, all right. A company incorporated outside India but does not include. So body corporate tells you it is created by law. Yes, definitely it is created by law. But even if the company is incorporated outside India, that is covered under the definition of body corporate. Only two things are not included in body corporate. That is a cooperative society and any other body corporate which the central government will specify. The central government can specify any other company that this is the company which will not be a body corporate, then that will also be excluded. So as of now, what you have to remember, any company, Indian company, foreign company, all of them are body corporates, as well as, however, the cooperative society. So any cooperative societies, if they're asking, they are not body corporate. All right. So LLP is a body corporate, but partnership is not a body corporate. Children, is partnership a body corporate? Partnership is a firm. It's not a company. So body corporate is a company. But LLP is registered. It is a separate legal entity concept. So LLP is also a body corporate. Books of accounts. What is the definition of books of accounts? So all your books of accounts that you're maintaining, that is receipts and expenditure accounts, sales and purchase, assets and liabilities, all your balance sheet, profit and loss account items, trading account, all they are known as part of books of accounts. The only thing specified is in case of the company specified in the section 148, they have to prepare the items cost specified under 1, 2, and 3. What is the 1, 2, and 3? That is receipt and expenditure, sales, purchase, and assets and liabilities. Of there, they have to take care of the items cost audit also. And other companies, simply they have to prepare these three kind of books of accounts. But only the companies which are specified in section 148, they have to take care of the items cost also, cost items also of these three different categories. Charge. What is the meaning of charge? Who is going to tell me the meaning of charge? Charge means a lien created on the assets. So if I am taking a loan from the bank, I have right on the asset. Very good. It's a mortgage kind of thing. Very nice. Very nice. Good answers. So if I have given if I've taken a loan from the bank and I've given them my watch in return as a security, so that means a charge has been created. Now bank has taken a charge, a security item has been given. So now if I don't repay the loan, bank has the right on my asset. They can sell my watch and they can recover their money. So this is the meaning of charge. So it is basically a lien created on the property or assets of the company in case of which is given as a security. So any company has taken a loan by mortgaging its property. So a charge is created on its property. That is the definition of a charge. Yes, definitely you have to pay interest also. Hypothecation, Abhishek, Khushbu, Sia, all of you are correct. Yes, Inder. So when you do registration of charges, detailed explanation of charge word is given over there. So every chapter you will be using these words. That's why preliminary try to cover all these definitions and the basics. Chartered accountant. Who is a chartered accountant? Somebody who is going to be the future. So you are all defined under section 2 of subsection 1 under Chartered Accountants Act, and you holding a valid certificate of practice is known as a chartered accountant, an expert, a professional who is giving the advice. CFO is an officer who has been designated like this at CEO. So CEO, CFO are more relevant when we study the definition of KMP, that is key managerial persona. Now, what is a company? Company means any company incorporated. We have already done the definition. So if the Reliance Industries, which was incorporated in 1973, and Tata Steel in 1907, and Forces in 1981. So these are companies which were formed before 2013. Can we say they are the companies incorporated under 2013? Will they be covered under definition of Companies Act 2013? Yes or no? Definitely yes, because Companies Act is applicable to companies which are Sarthak. We'll be doing the definition of KMP in a while. Yes, very good. That's correct. Companies Act is applicable to any companies which are incorporated under 2013 as well as under the previous company. Now, what is company limited by shares? What do you understand by company limited by shares? Is there any difference between company limited by shares and companies limited by guarantee? Yes, answer me. What is company limited by shares? Company limited by shares means a company where the shareholders are liable only to the amount unpaid on the shares. Very good. Very good, Kiran, Mehek, VB, Sunil, Swati. Excellent. Excellent. And what is the company limited by guarantee? Where you have given a certain guaranteed amount that in case of the liquidation of the company, I will be paying the liability up till this amount. And in case of company limited by shares, liability can be called upon any time in order to pay. Shareholders can be called upon any time to pay the liability. And in case of company limited by guarantee, they can be only called up in order to pay the liability at the time of winding up of the company. And where is the liability in both the cases mentioned? Is it mentioned in memorandum or articles? Tell me. Where is the liability of Stuti is correct. Good. Kiran, Abhishek, Om, very nice. All of you are giving wonderful answers. Attentive. Komal Preet, Srishti. Very nice. So it is mentioned in the memorandum of association. Aditya, Pooja, Sunil Kumar, all of you are correct. Now let's understand the definition of control. And when control is coming up, Sia Inder correct. And when the word control is coming up, definitely we'll be talking about the holding and subsidiary company. So control means the right to appoint majority of directors or controlling the management and policy decisions of the company. So controlling means I'm trying to control your majority of directors. So how do you control the majority of directors? Either you're appointing or removal of the directors is you're exercising the control on the board of directors. It can be either directly or indirectly or through their virtual shareholding or management rights also. So in this definition, we are relevant to the provisions of holding and subsidiary company. So let us understand how a holding company exercises a control over the subsidiary company. So holding company tries to exercise a control over the subsidiary company when they are trying to control their composition of board of directors or more than half of the total voting power of another company, then the other company becomes its subsidiary. Say, for example, a subsidiary company is a company, A Limited is holding 60% share capital in B Limited. What is the holding? What is the subsidiary company? Which is the holding and which is the subsidiary company? If A Limited is holding 60% share capital of B Limited, which is the holding and which is the subsidiary? Yes, tell me. A Limited is the holding and B Limited is the subsidiary. Very good. If A Limited is appointing majority or all of the directors and removing the directors of B Limited, can we say A Limited is a holding company of B Limited? Very good. So either of one of the condition is satisfied, then the company becomes a holding company. It's not both. Even if one of the condition is satisfied, then also the power can be exercised by the holding company. Subsidiary company includes any company which is a body corporate, but the only layer means subsidiary or its subsidiary. And no company shall have more than 2 layers of subsidiaries. Now, let us understand this problem that is given over here, the question that we're going to discuss in the class. So again, there is a test side by side for all of you for the questions. Paid up share capital of AVC Private Limited is 1 crore, consisting of 8 lakh equity shares fully paid up and 2 lakh preference shares fully paid up. XYZ and BCL are holding 3 lakh equity shares and 1,50,000 equity shares in AVS. Can we say that both of them are subsidiaries of TSR Private Limited? Very carefully, you have to examine and answer me. And then I will tell you how you actually have to attempt this kind of question in the exam. Jayashri, Bhumika, Divyanshi, correct answers you all are giving. Solve this question also very carefully. You have to think whether there is a relationship of holding and subsidiary between them or no. So total paid up share capital has been given. There are 8 lakh equity shares and 2 lakh preference shares. Shareholding has also been given. So apply the principle of holding and subsidiary, and then you have to tell me the correct answers. Also, would your answer be different if their TCR is having 8 out of 10 directors on the board of directors? So majority of the board of directors appointment is also being happening by AVS Private Limited. So both the answers have to be correctly framed. So first of all, you will give the definition. Holding company is one which has the control over the other, whereas subsidiary means a company on which the control is exercised. So you have to tell them how the control is happening. Holding company is exercising the control and subsidiary company on which the control is exercised. So when one company controls the composition of board of directors, then it shall be considered as holding company. Or it is controlling more than 1/2 of the total voting power. Here, both the companies are subsidiaries because the holding voting power of 4,50,000 in the aggregate. Did you see, children? 3 lakh plus 1,50,000. So 4,50,000 they're holding out of the total voting power. What is the total voting power? So they have taken 8 lakh shares. And they have not considered cumulative preference shares. They have only taken the 8 lakh equity shares which are having voting rights. So this will be considered as more than 50%. Therefore, it is having the holding subsidiary relationship. In second scenario, also TCR would be having control over the composition of board of directors. Again, it becomes the holding company. So all those who have given the correct answers that yes, it is a holding company, that is absolutely correct. Now, after doing holding and subsidiary, children, let's move to public company and a private company. So what is a private company? The private company is a company which has 3 important points you have to remember in case of private company, because public company's definition only says that it is not a private company. So any company which is not a private company is a public company. All right. So private company has 3 kind of points, that is restricting its transfer to shares. Number 1, it restricts the right to transfer the shares. Number 2, it prohibits invitation to public for securities. You cannot go to the public for subscribing to the securities, because if you're going to the public to invite the securities, then you become a public company. So private company has a prohibition on inviting to subscribe for subscription from the public. It has the right to transfer the shares is restricted, and the maximum number of members in private company can be 200. There is no limit of minimum paid up capital, but the maximum number of members will be 200. Yes, Khushbu, that's correct, but not an individual. Minimum number of members, 2 members in case of private company, and minimum 7 members in case of public. So public company has 7 minimum and unlimited number of members in public company, and private company has minimum 2 and maximum 200 members. Now, what is the amazing part in this? How many members are excluded in this limit of 200? All the past and present employees will not be considered while counting the limit of 200. So if I ask you, there are 220 members of the company and 20 members are the employees of the company. So will you count those 20 members? How many members are there? In a private company, there are 220 members, out of which 20 members are the present employees of the company. So will you count those? No, ma'am, we will not count. 200 will only be considered. Present and past employees are not taken. Excellent. Very good. And then what is another limit? Joint shareholders will be treated as one. So there are 20 shareholders who are jointly holding the shares. So two shareholders holding single shares, so that means 20 shareholders holding joint shares, 10 will be counted in that. Okay, so this is your question, which is again from your study material only. So I think you all have done this question. You can quickly give it a reading. 245 members, directors 190, employees. Will you count the employees? No, ma'am. Ex-employees, the shares were allotted when they were employees. If the shares were allotted when they were not the employees, then you will count these members. But the only thing you have to see over here is that they should be employees when the shares were allotted. Remember this thing. If the shares were allotted, they should be employees. But if the shares were allotted, even say for example, Mr. Ray was appointed in 2020, and that time he was given the shares of the company. He was a shareholder in 2020. He has taken up the shares in the company, and today if he is becoming the employee, so he got the shares when he was not an employee, then he will be counted in the capacity of a shareholder. If you were employee and then you were given the shares, then you are not counted. 10 shareholders holding jointly in the name of father and son. So 20 will be considered as 10. So 190 plus 10 will be the 200 number of members. So the company ABC Limited can be converted into private companies since it is the number of 200 members. Now another important provision, small company. Wonderful answers given by all of you. That's correct. Small company is always a private company. Number one, a company other than public companies. Children tend to get confused. Other than public company, what company? Bhai, which company I talk? So it basically means small company is always a private company. Number one condition. Number two, the minimum paid up share capital should be less than or equal to 4 crores, and the turnover should be less than or equal to 40 crores. If all these three things are being met, then you become a small company. And here the word and is used in case of small company. But can a small company be a holding and subsidiary company? No. If you're a holding company and you're holding a subsidiary which is having the paid up share capital 2 crore and turnover is 20 crore, then also the small company, the subsidiary company will not be counted as a small company, because in case of holding and subsidiary, this provision is not applicable. If you're a Section 8 company, then also you can never be a small company. Any other body corporate governed by special act like ICAI Act, then also it cannot be a small company. Let us quickly do the question from small company. But before that, I want you to do the definition of financial statement also. All the important definitions we have covered in the presentation, children. So you don't need to refer anything else. Nagesh, you want to ask something? Ask your doubt, beta. You can write it in the chat box. Nagesh has a doubt. What is the meaning of joint shareholder? It will work in the present condition. So Inder, if you're asking about joint shareholding, so Inder and me, we are jointly holding a share in a company. So while counting the number of members, we will not be counted as two members like Arlene ma'am and Inder. We will not be counted as two. We will be considered as one single member. Okay, so joint shareholders who are holding the shares jointly. So there can be three shareholders holding the shares jointly. So then also the three shareholders will be counted as one. Aditya, you can get this presentation from the portal better. You can take it. Extended turnover and extended capital. Okay, Nagesh, this is your doubt. All right. So there is a range which is given, child, for the small company, which says that the range which is defined in the act. So that is the basic range, 550 lakhs to 2 crores. And then the range for turnover has been written. You must have read over there that the word is written or such higher amount as may be prescribed by CG. So there can be a higher limit which can be prescribed. So that range, that limit now they have prescribed is 4 crores and 40 crores. So now that limit is fixed to 4 crores and 40 crores. So for exam, you can learn this definition. Jinky Mishra is saying again, small company. Okay, we'll do it. Okay, Mayur, we will once again do a small company. When we do the example also, then it will become more clear. But let us do the definition of small company once again. Small company, number one, is a private company. The minimum paid up share capital should be 4 crores and turnover should be 40 crores. If you want, I can do this from the study material also so that you can get much clarity. Let me open the study material for all of you. Okay. I hope screen is visible in front of you. It is a small company. Can you all see? Somebody can confirm me in the chat box. Yes or no? Okay. Yes. Thank you. Thank you. So small company means a company other than public company. So it is always a private company. Now, when we read under this, the Act defines paid up share capital which does not exceed 50 lakhs or such higher amount as may be, but it shall not be more than 10 crores. Or it says the turnover shall not be more than less than 2 crores and more than 100 crores. So this is the range. These are the upper and lower limits that law has given. But now if you read it over the amendment which has come, it says the paid up capital and turnover should not exceed 4 crores and 40 crores. So we have simplified for you. So what you have to learn is that small company is a private company having a paid up share capital 4 crore or lesser and paid turnover should be not more than 40 crore. So say for example, there is AB Private Limited, which is having a turnover of 3 crore and paid up share capital of 1 crore. Can you call it a small company? Yes, ma'am, or no, ma'am? I have a habit of writing along with this, but I can't write. So if there is a company which is having a, yes, ma'am, it is a small company because the turnover and paid up capital both should be less. So if I tell you there is a AB Private Limited having a paid up capital of 3.9 crore and the turnover is 55 crore. Can it be a small company? Yes or no? Now tell me. No, ma'am. No is the correct answer for the second one. Absolutely correct. So H Limited is the holding company of S Private Limited. And as per the profit and loss account, S Private turnover is 1.50 crore and paid up share capital is 40 lakh. Okay, that's nice. Since the turnover and paid up share capital is less than, they want to be categorized as small company. So tell me, children, can we say that it is a small company since the paid up share capital is less? Kiran, you're saying no, ma'am. Why, Deepika? No, ma'am. Why it is not a small company? Because it is a subsidiary and holding. So where provisions of subsidiary and holding are coming up, then you cannot be a small company. But if only S Private Limited would have been given in the exam and their share capital and turnover limit is given, then it will be a small company. But since S Private Limited is a subsidiary of a holding company, then children, please remember that this section is not applicable to Section 8 companies, holding and subsidiary companies, and any other body corporate formed under special. All right. So this subsidiary company we have already done. Yes, Tuti, it will not be a subsidiary company. Good, good, good. Right, Khushbu, no, because it's a holding company and subsidiary company relationship is existing. I hope small company is now clear to everyone. There is no doubt. And one, we are going to do a question from the examination question also. All right, good, Anjali. Oh, let's go to the presentation now. Let's do the definition of financial statements. Okay, Kiran is asking total voting power. Okay, I will just explain you total voting power also. Total voting power means basically out of how much share capital you're holding the exercising your voting power, how much, say for example, total voting power you can also understand equity share capital having the one voting right as per the one share. So the problem occurs when you have DVRs, which you must have done in the chapter of incorporation, differential voting rights. So different voting rights are given to the shareholder. So voting power basically means how much votes can be exercised in respect of your shares. The only differences arises when the word share capital is used in case of this DVRs, that is differential voting. All right, Kiran, I hope it's clear. One share, one right, Khushbu, that's correct. Financial statement in relation to a company includes balance sheet at the end of the financial year. What is financial statements? Balance sheet, profit and loss account, cash flow statement. You all know this. So balance sheets at the end of the financial year, profit and loss account that you're preparing, cash flow statement for the financial year. All the cash inflows, outflows are shown. A statement of changes in equity, how the equity has been changed over the period, and explanatory statement forming part of the documents for each of them. So a balance sheet and explanatory statement to it, profit and loss and the explanatory statement notes to it, cash flow statement and their explanatory notes, and the statement of changes in equity. These four are known as basically the financial statement. But it says that in case of OPC, OPC is one-person company. In case of one-person company, a small company, a dormant company, and a private company, it is not mandatory to prepare their cash flow statements. It says otherwise cash flow statement is mandatory for every company, that is P&L, balance sheet, cash flow statements, financial statements, you all have to prepare, and statement of changes in equity. But for OPC, small company, dormant company, and private company, CFS is not compulsory. CFS means cash flow statements is not mandatory. Okay, so let us understand with the help of this example. Very carefully, you also all have to read because it is July 2021 question paper question. So you all have to read this question very carefully. The paid up share capital of the company is rupees 50 lakh, 5 lakh equity shares of rupees 10 each carrying voting rights. Okay. There is no change in the paid up share capital and the turnover is 2 crore. Nice Software, which is a public limited company, is holding 2 lakh equity shares fully paid up in this. Smart Solution has filed their financial statements with the RC. Now it is telling you that this is the paid up share capital, this is the turnover. Then there is a company which is a holding company. Whether it is a holding and subsidiary, you have to decide, seeing the 50% criteria is being met or not. And then third point that they have given is that the financial statements were filed, but they have not filed the cash flow statements within the prescribed time. Now, ROC has issued a notice to Smart Solutions that, listen, you have failed to file your CFS and notice has come. Now, you are an expert, you are future chartered accountants. You have to tell me whether Smart Solution Limited is deemed to be a small company whose significant influence, whose significant equity shares are held by a public company. You say small company, whether the Smart Solution is a small company. Why he's trying to ask you small company? Because we just read small company can avoid filing the cash flow statement. So you first have to analyze whether it is a small company, yes or no. And now you have to tell me whether they have defaulted, made any default in finding the financial statements. First, you try solving it, then I'm going to show you the answers. All of you, those students who have just joined, good morning. Karnesh, Veena, Abhishek, all of you, please read the question carefully. Okay, Abhishek, Sunil, Kiran have already solved the question. We'll just reveal the answers. Very good, very good. So first you have to define what is a small company. Means a company which is a private company. So let us check whether it is a private company. Yes, Smart Solution Private Limited it is talking about. So one first condition is fine. That is a private. Paid up share capital should not exceed 4 crore and turnover shall not exceed 40 crore. So now what is the paid up share capital? It is not exceeding. All these limits are over there. Then it is defining the subsidiary company. For how you have to write in the exam, first you will give the definitions. Definition of small company, then the definition of subsidiary. Subsidiary company, where another company is exercising controlling more than one half of the total. Now, Nice Software is controlling 2 lakh out of the 5 lakh issues. What will happen? 2 lakh out of the 5 lakh. So it is not a subsidiary. 2.5 should have been there. At least 50% shareholding should have been there. So it is holding only 2 lakh. So around 40% shareholding it is having. So it is not 50%. So that is not a subsidiary. Hence, it is a private company and not deemed a public company. Okay, one point was left in case of public company. So if you're a private company, listen carefully, if you're a private company and a public company is your holding company, this is AB Limited, this is S Private Limited. So AB Limited is holding S Private Limited, then this subsidiary company, which is otherwise private in its article, it shall also deem to be a public company. So for all the compliance work, if a public company is holding a private company, then that private company should also deem to be a public company for all the compliance point of view from the Companies Act. But he is trying to tell you that since it is not a subsidiary, so it is only a private company, it is not deemed public company. So here the paid up share capital and turnover is also within the limit. So therefore, private limited can be categorized as small company. So now I have told you it is a small company. So many mixed answers you have given. Yes, ma'am. No, ma'am. Ma'am, it is a subsidiary. Apply your brain carefully, children. Don't write like this. Now have you understood? Those who have jumped into the conclusion. Abhishek, you said, no, it's not a small company. Sunil, you said, no, it's not a small company. Why did you say that? Because you quickly applied the principle of subsidiary and holding, but there is no relationship of holding and subsidiary. Om Prakash, Om Krishnam, Om Gupta. Om, you're right. Small company is not required to prepare CFS. Very good, very good. All of you have now given the correct answer. What if vice versa, Arinjan? Then you tell me. Vice versa would have happened, then it would have not become a small company. then it would have become, if vice versa means if you're asking if it becomes a holding company, then it will be holding subsidiary. It will not be counted as a small company. All right. Good, Sunil Kumar. Understood. That's great. Okay, good. Pooja Stuti. Very nice. All of you. Yes, Kiran Mishra, because it is not holding more than 2.5. That is 50%. So since now it's a small company, therefore there is no default in filing because small company is exempted from filing the cash flow statements. We just did the definition. So you write the definition, you write that note that these companies are exempted. So whether it is an OPC, small company, dormant company, or private company, which is a startup company, private company, which is a startup, they will not include their cash flow statements. Aranjan, what are you trying to ask? Vice versa, private holds public company. So if public company is holding the private company, then that private company child is deemed to be a public company. There's nothing referred to the vice versa in law regarding this. Okay. Only the provision has been given where the public company is a holding company of a private company. Then that private company, though it remains private in its article, its name will always have the word private limited and its articles are always private limited. But for compliance, it will be considered as a public. All right. So let's do one or more short definitions. Debentures. Debentures, when you go to the chapter of share capital and debentures, there in detail, you will understand section 71, how the debentures happen, how the DRR takes place. But here, just simple definition of debenture. Debenture is basically a bond or a stock, which is evidencing a debt, means showing a debt constituting a charge on the assets. So it's basically a liability of the company. Evidencing a debt means showing the liability. Two things are not included in the definition of debenture. Number one, Chapter 3D of the Reserve Bank of India, instruments which are given under Chapter 3D of RBI Act, they are not debentures, and any other instruments which CG along with RBI will specify, they are not treated as debentures. So debentures are otherwise all the debentures, stocks and bonds and other instruments which are showing the liability are considered as debentures, but two things are excluded from the definition of debentures: 3D instruments of the RBI Act and any other instrument which the RBI in consultation with CG will decide. CR DVR is your part of incorporation. You will understand about DVR in detail when you do the chapter of incorporation. Stuti, you only have to understand where the public company is holding private company, the private company shall deem to be the public. Okay, only this much information is correct. Swati, guarantee in case of company limited by guarantee, she's asking. So, company limited by guarantee, you have given the specific amount. There is no fixed amount. How much amount of guarantee can you be given? It can be any depending upon the type of company that you're part of. ESOPs, what employee stocks option? Again, when you do share capital and debentures, there you will be discussing at length about ESOPs. The company is issuing the shares to their employees at a subsidiary rate at a predetermined price to taking the shares of the company at a future date, that are ESOPs. And who is an expert? Important definition. When you do the chapter of prospectus, then also you have a reference of expert. So where do you see the reference of definition expert in chapter of prospectus? Can anyone tell me? Because it's your revision, you must have studied about prospectus also. Debenture, that point. Abhishek saying which point you want me to explain of debenture. Debenture, simple definition is given. Debenture is basically a debt or liability of the company. 2 points law has given will not be treated as debentures. What is that? RBI Act may instruments given under 3D of the RBI Act. We don't have to see what are these. Only the information that is given to us. That's it. And any other instruments which CG in consultation with RBI will tell. Okay. Sunil Kumar, management chapter. Okay, that is also having a reference. Komal Preet Kaur, that is correct. Kushi is asking OPC can be a small company. Okay, we'll just discuss it in a while, Kushi. That's correct, all of you. So in case of prospectus, expert statement is included. Komalpreet, you were correct. Expert statement has to be included while issuing a prospectus. In case of a company, it is matters and content stated under section 26, whatever to be included. Very good, Satya Gupta, if his reports are referred. So expert, basically, who is an expert? Expert is an engineer valued. So simple definition, CA, CS and cost accountant. We all understand CA, CS and a cost accountant can be the expert. Any other person who has the power and issue for the law being the time being in the force. So any lawyer kind of person, power or authority to issue the certificate of practice. And engineer and valuer are also considered under the definition of an expert. So I've gone to an engineer who has the power to issue the certificate according to the law in the time being in force. They can also give me a certificate for the valuation of my company. So it will be considered as the expert's opinion. Any engineer is giving this certificate, it will be considered as an expert's opinion. So engineer, valuer, CS, cost accountant, and any other person who has the power or authority to issue the certificate according to the law in force. They all will be considered under the definition of expert. And I've also told you who are the experts. Experts are the people. In prospectus, we are including the expert statement. Sia, Om, Satya, all of you are correct. All right. Now let's do last definition, one more, and then I'll take a small break in between. Financial year. What is the financial year? Tell me. Financial year means the period ending on the 31st March of every year. So if I have incorporated a company on 1st June 2022, when does the financial year will end? 1st June 2022. When will the financial year end? 31st March 2023. Excellent. All of you are correct. But if any company is incorporated on and after 1st day of January, then the period ending on the 31st March of the following year. So if I have incorporated a company on 2nd Jan 2024, when will be the financial year ending? 2nd January 2024, when will be the financial year ending? 31st March 2025. Excellent. Stuti, you're wrong. Everyone else is correct because I can read everywhere 25. You are the only one 24. Kashish correct, Sunil correct, all of you are correct. 2025 will be the correct answer. Anjali, Mayur, Sia. Very nice. So many attentive students in my class. Very good. Deepa. All right. So now what is the difference? Why financial year definition, ma'am? This we knew. 31st March it is ending. So what is technical about this? Only one point over here is important, that here you are a body corporate, you're having a foreign influence, you're a holding subsidiary or associate company of a company incorporated outside India. And in that case, that company is wanting you to follow a different financial year for the purpose of consolidation. Then, my dear children, that company will go to the central government, they will file an application to the central government, and central government can give them permission that you can follow a different financial year, whether a different financial period or a different financial year, just for the consolidation purposes. And then what is the company incorporated outside India? Basically a foreign company which is incorporated as per the applicable laws for the companies incorporated outside India. So if you're having a holding company which is in USA and your subsidiaries in India, and they want to follow the different financial year, for say for example they're following 1st Jan 31st December, and for consolidation purposes they wanted to follow the same financial year, then this company in India will make an application to CG, and if CG permits, they can follow a different financial year for the purposes of consolidation. So SK Private Limited, this is November 2019 questions. Why I have incorporated questions over here? Because you keep asking, ma'am, how many marks questions come from this chapter. So it is exactly ICAI's discretion. If we see the last year trends, around 6 to 10 marks questions have been coming from this chapter. Okay. So these are the kind of questions which come, 4 marks questions, 6 marks questions. It generally comes questions from this chapter as well. So it's a wholly owned subsidiary of Harry Limited. It follows a different financial year for consolidation of its accounts outside India. State the procedure to be followed. So what will be the procedure? Since it is a company incorporated outside India having a holding and subsidiary, they will make an application to the central government that want to follow a different financial year. First, you'll also write that otherwise the financial year shall always be, in case of India, a company financial year shall be ending on the 31st day of the March. But here, since it is having a foreign influence, as a holding and subsidiary relationship, you can make an application to the CG. And also, you are advised the above procedure, thinking that the Harry Limited is a foreign company registered outside India. So we are assuming that Harry is a foreign limited because they have written this information given over here. Khushbu is asking, what is the meaning of subsidiary company? So listen very carefully, Khushbu. Subsidiary company means a company in respect of holding company in which another company is holding more than 50% of the share capital. So if there is a company A Limited, which is holding 79% or maybe 51% share capital in B Limited, the voting power of B Limited, the control of voting power of the B Limited is in the hand of A Limited. 51% of the share capital of B Limited is controlled by A Limited. then what will be A Limited? Khushbu, you have to answer me. A Limited will be a holding company and B Limited becomes the subsidiary. जिस कंपनी की आप शेयर कैपिटल होल्ड कर रहे हो, दैट इज द सब्सिडरी, एंड द कंपनी विच इज कंट्रोलिंग द वोटिंग पावर इज द होल्डिंग, और it is controlling Satya Gupta more than one half, so more than 50% of the share capital. Okay, 51% is for government company. All right. Okay, good. Kushbu says she's clear now. That's great. So I think let's take a small break over here and then we'll continue and finish off with all the definitions. All right. Let's take a small break. Sorry? So I was asking, I could not see those pens over there for making the... Okay, okay, okay. Right, sir, right, right. All right, sir. So students, let's continue further. Any doubts till here? Anyone wants to ask any doubts before we move further? Financial year, financial statement, associate company, subsidiary company, everything is there. Okay, good. Let's move further. There are another few definitions like free reserves. Okay, Swati wants to ask something. Yes, Swati, you can type it in the chat box. Yes, Swati, you want to ask something? Yes, Kiran. Kushi is asking, can OPC be a small company? So OPC is always a private company, children. And if OPC is having the limits within the 4 crore and 40 crore, then definitely it can be a small company. Okay.
Yes, ma'am.
Yes, Swati. Yes, Swati, you can speak now.
Ma'am, is there any number of limits for allotting ESOPs to employees?
For issuing the
Employee stock option plan. So the company
employee
issues
stock
ESOPs to
option plan.
employees.
Okay, so when you go to the chapter of share capital and debentures, there you will study in detail about it. As of now, simply we have just done the definition that these are the basic shares which are given to the employees. Okay, so in that chapter, we will be discussing in detail about this. All right.
Okay, thank you.
Okay. So free reserves means the reserves as per the latest audited balance sheet of the company which are available for distribution as dividend. Means the reserves which are created out of the profits of the company. However, two things are excluded from the definition. Like we did the definition of debenture, it was something creating a charge showing the evidencing a debt, bonds and stocks evidencing a debt, and two things were excluded. Similarly, you have to learn the definition of free reserves. It is the reserves which are available for distribution of dividend. How will you pay the dividend? Only out of the profits you pay the dividend, right? So these are the reserves which are created out of the profits. But two things are ignored. Unrealized and notional gains. Unrealized gains means the gains which have not been yet realized, something which is going to be realized in future. And any amount on the revaluation of assets and liabilities, any revaluation amounts will not be considered as part of reserves. So revaluation reserves and unrealized gains will not be part of reserves. Other reserves which are created out of profits for distribution of dividend are part of free reserves. Now, global depository receipts, again, it is a part of your prospectus chapter. When you study over there in detail about public and private issue, there you do the detailed discussion about global depository receipts. But here we'll simply be touch basing the definition that is given. So global depository receipt is also kind of an instrument like you use shares. They're using the word depository receipts. These are created by foreign depository outside India and authorized by a company making an issue of such depository receipts. So there is an Indian company who wants to raise the money in overseas listing they want to do. So there is an issue house. There is an intermediary party in between them. They'll help you to raise their securities in abroad. That is a foreign depository outside India. So if you want to raise your money outside in foreign listing you want, then global depository receipts are issued. Okay, like you have GDRs, you call them global depository receipts for raising your money in foreign listing. Okay. Yes, section 41, you do in detail about this global depository receipts just before the private placement study works. Now, what is government company? Very, very important. How much percentage shareholding is required to be a government company? Is it 50% or 51%? Quickly tell me, Jim. Is it 50% or 51%? Excellent. At least 51%. So whatever amount is given to you over there, always divide it out of the total share capital into 100. You have to do the calculation. Don't do simple oral calculations. 4 lakh out of 8 lakh is 50%. So ye ho jayega ya nahi? It is given 4 lakh 20,000 out of 8 lakh. Do it. 4 lakh 20,000 divided by 8 into 100. Do the calculation. Do it, solve it. And if it is coming 51%, then only it is a government company. For holding subsidiary, it is 50%. So if you are holding 4 lakh 20 out of 8 lakh, it is more than 50%. It is absolutely fine. More than 50% it is thing. Here, at least 51% of the holding has to be. Okay. So 51% shareholding, if by central government or by state government or by both of them together, some portion. Say, for example, central government is holding 30%, state government is holding 40%, it becomes 70%. It is a government company. Clear? If I say central government is holding 49% and state government is holding nothing, do you become a government company? Yes or no? Orange and no 50.09. It is at least 51% has to be there. Okay. No, you do not belong. Very good. Very good. Because 49%. If I'm holding 50.3%, central government is holding 50.3%, do you become a government company? No. 51% shareholding has to be there. Then only you become a government. Now, this is clear. State government is holding 18%. Central government is holding 38%. Do I become a government company? Tell me. Central government is holding 38. State government is holding 18. Do I become a government company? Yes, ma'am, because together they are holding more than 51% shareholding. So I become a government company. Very good. Excellent answers. All of you have given the correct answers. I hope those who are sitting on the portal are also answering. Yes, Jayashree, Bhumika, Divyanshi. Very good. Yes, Ms. Bhumika, you have to satisfy both the conditions in order to become small company. That's correct. Abhishek Jha, what is substantial interest with respect to what you're asking, Mr. Abhishek Jha? Yes, Bhumika, your answer was correct. All of you have given correct answers over there also. Very nice. Okay, so now this one point is clear for government company. Another point is, if you are a subsidiary of a government company, then also you become a government company. So say, for example, there is a AB Limited, a government company, and it is holding 60% shares in CD Limited. Can we say CD Limited is a government company? Yes, ma'am, or no? AB Limited is a government company. It is holding 60% share capital in CD Limited. So CD Limited will also become government company, not by the virtue of government shareholding, but by the virtue of holding company being the government company. The subsidiary will also become the government company. Now, if I tell you that there is a company, listen very carefully. There is a company, AB Limited. Its shares are being held 10% by central government, 20% by state government, and AB Limited, which is a government company, is holding 8% shares. Will it become a government company? Why it is not becoming a government company? Because holding company should have, no, Nagesh, it's wrong. No is the correct answer. So why it is not becoming a government company? Because holding company relationship is not 8%. You have to have 50% relationship to become a holding company, and government stake is anyways below 51%. So then CD Limited will not become a government company. All right. So let's do this question quickly. State government of PEX. Now this question will make you more clear. Quickly read this question, children. Why do you want to make 50.9% a government company? Mr. Sarthak Tamboli. When I've said 51%, why 50.9? Why do you want it? It is 51% means 51%. 51.1% you can do it, okay? State government of X is holding 48 lakh shares. The paid up share capital out of 95 lakh shares, he's holding 48. He directly holds this much shares of Z Limited out of the share capital of 5 lakhs. Now you have to tell me whether Z Limited claimed the status of subsidiary company as a government company and whether Z is a subsidiary of Y Limited as well as government company. Quickly read the question carefully and give me the answers. I'm waiting for your answers. Devyanshi, Jayashree, all of you are correct, children. Good. Will it become a government company? Will it become a subsidiary company? What do you say? Z is subsidiary of Y, but not a government company. No, ma'am. Satya Gupta is saying. Abhishek Singh is giving an answer. So how will you write the answer? You will have to give the provision that this is the definition of government company and this is the definition of subsidiary company. Both the definitions have to be given, then only you get the marks. If you simply write over there, yes ma'am, no ma'am, nobody's going to give you marks. So your representation, your writing of the answer is something which is very important in revision. You should know about this. So you define, give definition, facts of the case. So here 51% of the of 95 lakhs is 48.45. Here he is only holding 48 lakh shares, which is below 51%. Now are you clear? 51%. So that's why I've written specifically that agar 51 karenge to 48.45 aega. He's only holding 48 lakh, which is below 51%. Therefore, Y is not a government company. But it is holding more than 50% of the shares, one half. Therefore, it becomes the holding and subsidiary relationship is there. Therefore, Z is a subsidiary of Y Limited, but since Y Limited is not a government company, therefore Z will also not become a government company. Is that clear? Absolutely correct. Good. Now comes your technical definitions of KMP. Let's move further, children. We have to complete many definitions, so let's quickly finish it off. KMP is your... Stuti wants to see the first page again of the answer. Check the answers, children. You'll get these presentations. Don't worry. Is it clear? Definitions, facts of the case, and then conclusion. Analysis also have to be done. Don't just write the facts of the case. Analysis and conclusion has to be given in the exam. All right. KMP is a key managerial personnel. Number one, he is the CEO or CFO of the company, Chief Executive Officer or Chief Financial Officer, or MD or manager. So from M, we have to learn. From C, we learn CEO, CFO, Company Secretary. 3, starting from C, CEO, CFO, Company Secretary. 2, starting from M, Managing Director or Manager of the company. So how do we have to learn? Key managerial personnel, 3 C's, CEO, CFO, Company Secretary, MD and Managing Director. And then whole-time director. So CEO, manager, managing director, or CFO or company secretary, whole-time director, these are the key managerial personnel. Who is a whole-time director? Director is in the whole-time employment of the company. And such officer, not more than one level below the directors, who is the full-time employment, designated as key managerial personnel by the court. So who are KMPs? These 4 people, and person one level below the director who is a whole-time employment. Who is a director who is in whole-time employment? Means a director who is a whole-time director. So there is a director who is in the whole-time employment. He is known as WTD, that is whole-time director, and a person just one level below him. So if Harleen ma'am is joining a company AB Limited and Harleen ma'am directly reports to the whole-time director over there, Mr. D. So then Mr. D is KMP and Harleen ma'am is also KMP, that is key managerial personnel, because she is one level below the whole-time director, that is Mr. D. So CEO, CFO, CS, managing director, manager, these are the whole-time key managerial personnel. Then whole-time director and person officer one level below the whole-time director is also a key managerial person. All right. Khushbu is now asking, I want to see the question also. You should have seen it before. See the question, Khushbu, fatapat se. All right. Now let's move on. You can watch it later after stopping the screen. Key managerial personnel definition is clear. You have to learn it. Okay. Listed and unlisted companies. So all the companies whose securities are listed on the stock exchange are the listed companies. So if your securities are listed on the stock exchange, recognized stock exchange, NSE or BSE, National Stock Exchange or Bombay Stock Exchange, if your securities are listed, you become the listed company. But what is the twist in this? Following are the companies which are not listed companies. So public companies whose equity is listed on a stock exchange, they are listed companies. But category of public company whose equity is not listed, but they said, okay, we are going to list our non-convertible debt securities and a non-convertible redeemable preference shares. So they had non-convertible debt securities, which they have issued on private placement as per SEBI. And they have non-convertible redeemable preference shares, which are issued by private placement and as per SEBI. They have listed these securities, but they have not listed equity. Then it is not a listed company. Private company which have listed their non-convertible debt securities. So there's a private company, they listed their non-convertible debt securities which were issued by private placement and as per SEBI. They followed SEBI guidelines, they followed private placement and they've issued non-convertible debt securities. And if they have listed them, then they are not a listed company. Private company which have just listed their non-convertible debt securities, they are not listed. Public company which have not listed their equities on recognized stock exchange in India, but have listed them on a jurisdiction mentioned under section 23 subsection 3, that is a foreign jurisdiction. Now you know what is section 23 subsection 3, prospectus chapter, first 3rd or 4th page of prospectus chapter, you have read it over there. So it is about foreign listing. If you have listed your stock exchange or listed on the stock exchange in foreign jurisdiction, then you are not a listed company. You should have listed your securities in the Indian Stock Exchange in order to be a listed company. Yes, Sunil Kumar, when they have listing their shares, if your securities are listed on the stock exchange, then you're a listed company. These exclusive 3 categories, if you're falling under these categories, then you are not a listed company. Number 1, public company, which has just listed their non-convertible debt and non-convertible preference shares, which they have issued as per private placement and SEBI guidelines, but they have not listed their equity shares, then they're not listed company. Private company, which is simply listed their non-convertible debt securities, which they have issued on private placement and as per SEBI, then they're not listed company. And public company, which have not listed on Indian Stock Exchange, but they have listed their equity shares on foreign exchange, then they're not listed. So these 3 broader categories are exclusively excluded from the listed companies definition. So if I ask you, you have to examine now. Okay, good, Sunil. So now you will answer me these questions. You'll get more clarity. November 2022 question. ABC Limited has listed its non-convertible debt securities. So whether the following companies will be considered as listed or unlisted, you have to. There is a company, public company, which has listed its non-convertible debt securities on placement, private placement as per SEBI. ABC Limited is a listed company, yes or no, children? First, you will give the definition in the exam. Then one by one, you will give the answer to them. So ABC Limited is unlisted because it has simply listed its non-convertible. You just read that if you're listing a non-convertible, then you're not a listed. CG Limited has listed its securities non-convertible redeemable preference. Then also it is unlisted. PRS, a public company, not listed its equities on recognized stock exchange, but they have listed in the foreign jurisdiction, that is section 23, subsection 3. Then also it is an unlisted company. So you will simply give the definition, and in review of the above provisions, since all of them fall into the category of unlisted companies, they will not be part of the list. Is that clear, all of you? All of you have given the correct answer. Mayur Gupta, Stuti, Komalpreet, Om, Pooja, excellent all of you. So they all are the unlisted companies. Now, another problem. A Limited is an unlisted public company having 5 directors and 2 independent directors. B Limited is a subsidiary of A Limited and having the paid up share capital of 1.5 crores. Now, these are the kind of questions you should be solving in your last few days before exams, because all the major concepts are being covered in such questions. Turnover is 18 crore and the said company is a startup company. It's a private company and it is a startup company. It's not the startup company, I'm sorry. And the said company is not a startup company. Whether M Limited is mandatory required to prepare the cash flow statement. Again, we have given you a question on the basis of CFS. Pooja, you were correct for the previous one. Now pay attention to this question. B Limited is mandatory required to pay CFS, yes or no? And also tell me if you fall under OPC, small company, dormant company, private company, what would be your answer? So you have to analyze the question very, very carefully, children. Inder has simply written yes. So you have to analyze the question. First, you have to see it is an unlisted public company. B Limited is a subsidiary of A Limited. Anybody is talking about the private company over here. It is not a startup, but it is again talking about the public company. So whether it is an OPC, can you say it is an OPC? It is having 5 directors, including OPC should be one single person, 1% company. So it is not OPC. Can you say it is a small company? Let's analyze them. And first of all, you give the definition of financial statement, and then you will analyze one by one all the categories mentioned over here. It is given that the company is having 40 members and its name is not containing OPC, so it is not OPC. A company which is subsidiary cannot be. So here it is clearly mentioned that it is subsidiary of A Limited. So B Limited is although having within the limits of turnover and paid up capital, but since it is subsidiary, so it will not be small company. For dormant company, it's a company is actively carrying on the business, so it cannot. We have written on the basis of given facts. You're saying that the company is doing business, filing the financial statements, carrying on the business actively. How can you say it's a dormant company? Dormant company is somebody who's not doing the business. Private company, which is a startup. So it is not a startup. Why? Because a company which is a subsidiary of company not belong, shall deem to be the public company, even if it continues to be private company. It's so private company, which is a startup, is definitely exempted from filing the cash flow statements. But it is not a private company, which is a startup. Why? Because it is a subsidiary of a public company. So it shall deem to be a public company. All right. Yes, Mayur, because the relationship is existing, not a small company. All of you have tried to give the best answers. Very nice. So I hope this is clear. B Limited shall deem to be a public company since it is a subsidiary and unlisted, so it will not fall in the category of exemption. So we will conclude that B Limited is mandatory for B Limited to file the cash flow statements. They cannot take the exemption. So here we come to, it's not ended. We have just come to an end of the first category of presentation. Any doubts so far? Feel free to ask your doubts, children. Meanwhile, I'm opening the further session for all of you. So we'll continue with the more definitions. Anyone having any doubts can raise their hands. Home is saying everything is clear. Okay, Nagesh, yes, you can unmute. Sir Nagesh wants to ask a doubt. Yes, Nagesh, you can speak. Nagesh, you can type your doubt otherwise in the chat box. I'm glad everything is clear. Those who have written in the comments, so that's wonderful. Nagesh, are you able to speak now? All right.
Yes, ma'am. Ma'am, in dormant company, uh, they should file the FS, uh, whether they have no business or
So dormant company, you refer to your CA Foundation book in the last types of companies they have given. They're not doing any significant accounting transactions apart from those four categories. So if you're just doing those four categories, then you will not be just simply considered you will be considered as a dormant company if you're not doing anything apart from those four categories. So there is no necessary of filing of the financial statements because you'll be filing the financial statements only when you're doing certain kind of business. Okay.
okay.
It's clear. Okay. Global depository receipts. Abhishek saying that is part of your share capital and debentures. When you do that chapter in detail, you will be discussing about GDRs. Yes, Pooja, we'll be revising the whole of the chapter today. Okay, Khushbu, we'll talk about writing of answers. So Abhishek, simply you have to remember is GDRs are when you are trying to raise your shares in the foreign market. That is how the GDRs are being raised. Okay, so you can refer to section 40 when you go to this chapter of prospectus. In detail, we'll be discussing it over there. Member and managing director. Now, who is a member of a company? Member is a person who has subscribed to the memorandum of the company. So there is a person who is a promoter. Remember, promoter, somebody who has come up with an idea of starting a company. So what will the promoters do? They will make the memorandum of the association in order to get it in corporation. They will make the memorandum and articles of the association. They will subscribe to the memorandum. They will sign it. So member means a person who has signed or subscribed to the memorandum, who has deemed to agree to become a member of the company. And when it is registered, his name will be entered in the register of members. So underline this line, children. It's very important. Only the person whose name is entered in the register of members will become the member of the company. Okay, so you are a member when you subscribe to the memorandum, then you went for incorporation to the registrar of companies, and now they have given you the incorporation certificate and they have entered your name in the register of members, you become the member. Any other person who agrees in writing to become a member. So you have transferred your shares to another person, you have made an agreement with him, and that person has agreed to become a member of the company, and his name is entered in the register of members, he becomes the member. And every other person who is holding the shares of the company, whose name is entered as the beneficial owner in the records of deposit. So when you study in detail about demats of securities, depositories are being over there. So here your shares are being held in the name of the beneficial owner. Your name, even if your name has been added as the beneficial owner in the records of depository, then also you become the member of the company. So you're holding the shares of the company and your name is entered as the beneficial owner, you become the member of the company. And yes, Swati, what are you asking? Yes, Swati, when I open the study material, then we will discuss this question. Okay, remind me at that time. Okay. Managing director means a director who, by the virtue of agreement in the articles or by resolution passed in the general meeting or by its board of directors. So who is the managing director? Either by articles or by resolutions in general meeting or by board of directors. He has been given the powers to manage the affairs of the company, is known as managing director. So who is the MD of the company? So many movies you have seen since childhood. Company ka MD hai, managing director is somebody who is managing the affairs of the company. How has been given the powers of the management? By either by the articles or by the resolution passed in the general meeting or by the board of directors of the company. Now, this is again very interesting definition. Examiner can ask you question on the basis of net worth. Practical questions can come on this. They can give you the figures, calculate the net worth of the company. So net worth is generally used in the further chapters where you will be doing the provisions related to net worth, but the definition of the word net worth is given in this chapter. So net worth means the aggregate means total value of the paid up share capital and all the reserves created out of the profits and the security premium account. So three things you're going to add in net worth. Number one, paid up share capital plus security premiums plus all the reserves out of the profits. And three things needs to be reduced from it: accumulated losses, deferred expenditure, and miscellaneous expenditure not reduced. So all the accumulated losses and deferred revenue, deferred expenditure means the expenditures will be deferred and taken to the next year. And miscellaneous expenditures not written off will be reduced. And two things needs to be ignored: revaluation reserves, reserves created out of the revaluation of assets. What is revaluation of assets? Whenever you're revaluing the assets, whatever the reserves are created out of that, and any write back of depreciation or any write back of depreciation and amalgamation. Okay. So at times the company has provided excessive depreciation in a particular year. Now they want to write it back. So any write back of depreciation needs to be. So what is the definition of net worth? I've written it in a very simplified manner in the presentation. You can simply refer to this definition to learn it. Three things you're adding: paid up share capital, security premium account, security premium, and all the reserves created out of profits. Three things you're reducing: accumulated losses, deferred expenditure, and miscellaneous expenditures not reduced. Two things you need to ignore: revaluation reserves and write back of the depreciation. Out of the profits. So in the out of the profits, whatever the reserves have been created means those which are available for distribution of free reserves. Okay, revaluation reserves and unrealized gains will not be included over here. Is that clear? Another interesting definition. Now we're going to move. First, we will do all the big important definitions from my presentation, and then balance definitions we will be doing from the study material. See, a write back of depreciation means where some excessive depreciation has been provided by the company and company is trying to write it back in the next year. So that write back of depreciation will not be considered while calculating the net worth. Now, children, these are 2-3 definitions which are very, very technical and important. Just pay attention to it. Officer who is in default, OID. You must have read in other chapters many a time when you talk about the penalties. The directors will be charged along with the officer in default will be charged with this kind of penalty. So who is that officer is in default? These are the people who come under the category of officer who is in default. Means जिसने गलती की है, who is in default. Officer fault. These are the category for the purpose of any provisions of this act where the officers of the company shall be liable to any penalty. These are the officers who will be who are they referring to in case of officer in default. Number one, whole-time director of the company, and number two, key managerial personnel. Now, quickly tell me who are the key managerial personnel. Test time. Who are the KMPs? We have already done. Let me open the chat box. Who are the KMPs? And let me see the answers coming over here. Jayashri, Bhumika, all of you quickly give the answers. Devanshi. Manager, MD, Satya Gupta, right? You have to write all the people who are KMP. Don't write the simple. Deepa saying only 3 names. Deepa Patel, sorry. Nagesh, correct. Jinky, only 2 names. Aren, now by now you should have. Abhishek Singh, excellent. So by now you should have learned them. So managing director, manager, CFO, CEO, CS, whole-time director. Why are you writing director, Abhishek Singh? It's whole-time director. And person 1 level below the whole-time director of the key managerial person. Yes, Khushbu, that will be person who is an officer in default. But first pay attention to what I'm asking. Okay, directors of the company. Okay, so Sunil Kumar, you have to define the one person, one level below the whole-time director is also your key managerial person. So excellent, all those who have written key managerial personnel, that is correct. So key managerial personnel, you all know the category, but officer who is in default is all the key managerial personnel does any fraud, they will be held liable. And whole-time director also. He has exclusively given whole-time director is also responsible. Although KMP comes under the definition of a whole-time director is also being covered, but in officer in default, they have specifically told you whole-time directors, KMP. Third category is if there is no KMP in the company is not having key managerial personnel, then such director or directors which are specified by the board. So there is a company AB Limited, they do not have any key managerial personnel. So board of directors has decided whenever any fault will happen, Mr. A and Mr. B are the directors who will be considered as officer in default. Then those, and they have taken the consent in writing. A and B has given the consent in writing that, okay, fine, we are the officers who in default if any problem happens to me. Then Mr. A and B will be the officer in default. And if no director is specified, for example, board of directors has not specified who all will be the officer in default, then all the directors of the company will be officer in default. So point number 3 is further divided into 2 points. Listen carefully. Number 1, if there is no KMP in the company, then the director or directors which board specifies. And if nothing has been specified, then all the directors of the company. All right. So first 4 categories are clear. Number 1, whole-time director, KMP. Number 3, if no KMP, director specified by the board, if nothing has been specified, then all the directors of the company are the officer in default. यहाँ तक clear हो गया सबको? Yes, good. Yamin, very good. Correct answer. Okay. Now, 4th category. Any person who is under the immediate authority of the board or key managerial personnel, and he is charged with the responsibility of maintaining, filing the accounts, and he is actively participating or knowingly permitting and knew how to take the prevents to stop it, but did not do that. Still, he is doing any kind of fraud. So, person one level below the board of directors or KMP. So either he is reporting to the CEO or he is reporting to the CFO or he is reporting to the board of directors, and that person is aware of some important information and he is trying to hide it. He's not sharing it. He's preventing it to be knowing to the another person. He's responsible for such actions. Then any fraud happening, then this person who is one level below the board or KMP will also be responsible as the officer who is in default. Point number 4 is clear. A person under the immediate authority means one level below the board or KMP who has been given the responsibility and is actively participating in the fraud, he will be officer in default. Everyone clear? Point number 5. Any person according to whose advice, directions or instructions the director of the company is accustomed to act, other than the person who is acting in a professional capacity. Important mark kar lena is very important. There is a person, Mr. A, and he is giving the advice. Suppose Tata Motors, Mr. Ratan Tata, he is giving the advice. He has retired from Tata Motors, but he's still giving the advice, how the directions, giving the directions, advice and instructions, how the directors of the company shall be acting. Then if tomorrow any fraud happens, Ratan Tata will also be considered as officer who is in default. Any person according to whose advice, directions. Here, point number 4, one person who is one level below the board of directors. Here, one person who is above the directors, who is advising how the directors have to act, then such person will also be considered as officer who is in default. Other than a person in the professional capacity means a CA or CS who are giving the advice, they will not be considered as the officer in default. So tomorrow you as chartered accountant, you're giving advice to the company, how the company should be acting, directors should be behaving. You will not be considered as officer in default. Any person in professional capacity will not be considered, but any person who is giving the advice according to whom the directors are acting will be considered as officer in default if any fraud happens. Every director in respect of contravention of any of the provisions, so all the directors who are doing contravention in the provisions of the Companies Act, they will be held responsible. Whenever there is any issue or transfer of shares, the share transfer agent, registrars to issue and merchant bankers will be held liable. So when you're issuing or transferring the shares of the company, any fraud happens, transfer agent, share transfer agent, registrar to issue and merchant bankers, tino, will be held liable as the officer in default. Yes, Abhishek, saying you can say about that also. So there's a promoter, member or any person according to whose advice the directors are acting. So if you can prove this point in the question that this is the person according to whose advice directions the company is acting, the board was acting, but he is not a person who is a CA, CS or lawyer of the company in professional capacity, then also if the fraud happens, then this particular person will be considered as officer in default. Is that clear, children? Officer in default definition is clear to all of you. Any doubts in officer in default? Let's move to the definition of promoter. Who is a promoter of the company? Good. Thank you, Abhishek, Swati. I'm so glad that you are getting everything clear. So that's nice. A person who has been named as prospectus or is identified in the company in the annual return under section 92. Promoter is a person to promote their product. Okay, Khushbu. So in order to promote a product, we are not going to promote, but we are going to set up a company. So promoter is a person who has come up with an idea and he wants to start up a company. And now his name has been given in the prospectus. He has the control over the affairs of the company, whether directly or indirectly, because a promoter, when the company gets registered, you become a member. And when you take a share in the company, you become a shareholder. Out of the shareholders, you have appointed directors. So promoter can be a shareholder, director, or others. And according to whose advice instructions the board is accustomed to act. So we just did this point. He can be an officer in default also. So they have not written the word directly promoter, but they just told you according to whose advice, directions, and instructions the board is acting. Nothing provided shall apply to a person acting in professional capacity. So we just did. Can you relate this point number 5 given over here and point number C? They are exactly similar, and it tells you that if somebody is acting as CA, CS, and lawyer, they will not be considered as the promoter of the company because you're just helping them, giving them advice. All right, good. So promoter's definition is also clear. Try to learn it. Examiner can give you for 2 marks, so you should have clarity. So related party is the definition, very, very important and little tricky. So I want all the heads up over here and paying full attention. After doing related party, we'll just take a small 2 minutes break because we'll be shifting to the study material and then we will do all the balance definitions from the study. Let's start with who is a related party. So related party definition is given under section 2, clause 76. It tells you different sub-clauses have been given. 7 to 8 sub-clauses are going to be discussed. One by one, we're going to understand who is the related party. So in respect to a company, company's director or his relative are the related party. So if I am having a company ABC Limited and Harleen ma'am is director of that company, then Harleen ma'am and all her relatives will be the related party to ABC Limited. Who is the definition of relative? You just do in a while. Generally, mother, father, brother, sister, all these close kind of relationships will be covered under relatives. Okay. Yes, accounting standards are also there for this. Basically, children, related party transactions, you understand in the accounting treatment how the related party transactions have to be done. So that's why it becomes important. This is largely a part of your CA finals, where related party transactions you'll be learning, but here simple definitions have been given so that your brain becomes accustomed that you have heard about these words and definitions. And one examination question has also come. We will do that question also. So a director or his relative in respect of a company is their related party. Then in respect of a company, a KMP or his relative. So my company ABC Limited, all my CEO, CFO, whole-time directors, all these people and their relative, KMP, CEO, CS, WTD, CFO, any other officer as may prescribed or his relative will also be my relative. So you have understood with respect to individual, there are 2 broad categories. Number 1, director or his relative or KMP or his relative are considered as the related party. Number 3, in respect of a firm, a company and firm becomes related party if a manager or managing director of a company is acting as a director, manager, or his relatives, any one of them. In case of a ABC Limited, ABC's Limited director, manager, or his relative is acting as a partner in a firm. So ABC Limited is a company. There is a director, Mr. A. This director, Mr. A, is also a partner in ABC Associates. Then ABC Limited and ABC Associates will become a related party. Okay. All of you can write down these examples. ABC Limited, a company. ABC Associates, a firm. Director of ABC Limited, Mr. A, he's a partner in ABC Associates. then both of them will become a related party. Either my director or my manager or their relative is a partner in the firm. If there is a company ABC Limited and there is a company Private Limited as Private Limited, in which again my director, manager or my relative is a member or a director. So Mr. A is the director of my ABC Limited. He is a member or a director in Private Limited also. Then this private company and my company will also become the related party. Is that clear? Everyone clear on these 4 points for respect of individuals, director or his relative, KMP or his relative. In respect of firm, if my director, manager or relative is partner in your firm, then you become related party. In a private company, if my director, manager or his relative is a member or director in your private company, then you become related. Clear ho gaya? Good. Then fifth point. In case of a public company, if my director and manager, not my relative, see here he is using the word director, manager or relative. Firm ki case mein bhi director, manager or relative. In case of a public company, what have been used? So write it in your notes, not the relative. Only the director or manager of a company is a director in a public company, and is very important, and holding more than 2% of the paid up share capital along with his relatives. So along with his relatives is holding more than 2% of the paid up share capital and is a director in public company, then that company and public company will also become a related party. So if a company Reliance director, Mr. Ambani is a director and is holding more than 2% share capital of AB Limited, then Reliance and AB Limited will become related parties. All right. Or my company's director or manager, I am having a company Reliance, my director or manager, Director Mukesh Ambani, is advising and directing the board of directors of another company, then that company will also become my related party. If my director, according to whose board of directors, manager and MD is accustomed to act, so that company will also become my related party. Again, any person against whose advice, your biggest point, all the holding and subsidiary companies, all the associate companies, all the investing companies are related companies in respect of their directors, KMPs. So all the co-subsidiary means if a company is having two subsidiaries, AB and A Limited and B Limited. So आपस में relationship is co-subsidiaries. Okay. But for the purpose of section 188, this clause will not apply to a private company. It says if we are talking about a private company, then this relationship of director, KMP and relatives will not be applicable. Otherwise, holding and subsidiary and co-subsidiaries and associate and investment company, all these are related parties. But where we are talking about specifically about private company, then section 188 clause will not apply to the private companies. We'll understand with the help of example given over here, May 2020 question. I'll explain you in a while. And director over here, he is the other than independent director. Director or KMP of the holding or his relative. So if I am a director or holding or director of a holding company, is my relative is your related party with a subsidiary company. Or my director or a KMP of my holding company or his relative was also your related party, but not an independent director. Independent director means an outside person that you have appointed. Somebody who is not appointed from within the company is an independent party. He can never be a related party. But whole-time directors he's talking over here. Is that clear, children? And any other person, no such further person has been prescribed as of now. Now let's quickly do this question. ABC Private Limited has two wholly owned subsidiary companies, D Private Limited and E Private Limited. So there is a company, Private Limited. He has two subsidiaries, D and E. Examine whether D Private and E Private will be treated as related parties. So we just understood that section 2, clause 76, subclause 8, that all these kind of holding and subsidiary relationship, associate company relationship, investment company relationships, all their directors, KMPs and relatives will be considered as the related party. But I just told you that this will not be applicable to a private company. So it says accordingly, a holding subsidiary, associate and subsidiary or holding to which is also subsidiary investment company, the related party section will be applicable. But since both of them are wholly owned subsidiary of ABC Private Limited, so therefore these are D Private Limited and E Private Limited are related parties. That is clear because they are holding and co-subsidiaries. However, notification which has come with respect to 188, it is not applicable to the private company. Therefore, you can simply say that they will not be the related party. So all those who are saying yes, I'm telling you a private company, it's not applicable, you're still saying yes. So they are not applicable to the clause of the private company. Is that clear, children? Please do all the examination questions, RTPs, MTPs from the ICAI website. They have already uploaded each and everything over there. You simply have to download and try attempting these questions. All right. So the last definition from the presentation is who is a relative. So the members of HUF, their husband and wife, or any person who is related to in the prescribed manner, like a mother, father, son, daughter, brother, and sister. So who is a relative? Mother, father, son, daughter, brother, sister. So these all close relationships are your relative. Father includes stepfather. Mother includes stepmother. Son includes stepson and wife also. But daughter, stepdaughter is not included. As per law, it is written. You don't have to apply your mind why it is not included. Law has said it's not included, it's not included. So stepdaughter is not included under the definition of relative, and daughter's husband is also included. Brother and sister, including stepbrother and stepsister. So how we have to learn relatives definition? Relative is somebody who is related to another under the members of the HUF, husband and wife, or mother, father, husband, mother, father, husband, wife to hui raha, mother, father, son, daughter, brother, sister. Brother, sister, stepbrother, stepsister, mother, father, stepmother, son, stepson, son's wife also, daughter, not stepdaughter, and their husband. Is that clear? Yes, husband, wife is spouse only, Abhishek Singh, so definitely it's covered. All right. Khushbu, what are you asking? Other members? Yes. All the other members will be relatives. That is correct, Khushbu. All right. Okay, Sia wants to ask something. Yes, Sia.
Ma'am, actually, my question is that only the
Can you
clause
please
8,
be loud?
ma'am, only the clause 8 is not applicable on private company. Rest all the clauses will be applicable.
Yes, rest all the clauses you will apply only where there is written about private company now. So there is only fourth one which refers about private company. The fifth one is again about company's relationship with the public company. Okay, so only that clause holding subsidiary, specifically 188, the new notification that has come up, they have excluded it for the private company. So you're correct, okay?
Okay, ma'am.
Anybody else wants to ask any doubt before we proceed to the study material? Any doubts, children? So I'll just take a small break over here, 2 minutes. Just go through your study material also, and we'll be taking up the
Ma'am,
balance.
one more doubt I have. Can you explain the clause 5th one more time?
Of related party?
Yes, ma'am.
Okay, we'll be just opening the study material and then we'll be taking the further doubts. So let's take a very small 2 minutes break over here and then you can just quickly flip through the pages of study materials. Let's take a All right, students, I hope you would have gone through the study by now. And I think Sia was asking something. So let's take that definition first. Related party. I wanted to show you from the study also. So here it is in front of you on the screen. With reference to a company, it means director or relative. KMP, firm in which he is director or manager is a relative, and private company in which the director, manager or his relative is a member or director. I hope it's clear. So fifth point, I think she was asking. In Hindi, Arun Jain is saying in Hindi. Okay, so first I'll explain you in English and then in Hindi, okay? So a public company in which director or manager is a director, and along with his relatives, he is holding more than 2% of the paid up share capital. This is the limit that they are giving. So if there is a company in which there is a share capital of rupees 100 crore, so more than 2% of this 100 crore, if you along with your relatives, you're holding in that company, then that company and your public company, and your company will become your related party. So with reference to a company means I am having a company ABC Limited. You are a company CD Limited. My director or manager is a director in CD Limited, and along with his relative is holding more than 2% of share capital of CD Limited. Then ABC Limited and CD Limited will be related parties. All right. And in sixth point, the word uses BC, that is body corporate. Can anyone tell me what is the difference between using the word company and a body corporate? Does it make any difference, children? When I use the word body corporate, what is the difference? Quickly, you have to answer me. This is your question to answer. It includes a company only. Now, why have they used the word body corporate? It's a wider term. Very good. Yes, Sia, both the conditions have to be seen. It includes LLP, okay? Very good, Kiran. Excellent answer. Ma'am, it includes foreign company. Abhishek, right. Nagesh, right. Om Krishnam, right. Stuti, very good. Anjali, Kashish, excellent answers. So body corporate, basically, he is trying to tell you that foreign company is also included over here. Devyanshi, good. Bhumika, Jayashri, all of you are correct, children. All right. So company in only body corporate includes company. Swati, very good. So it is not just counting the company inside India. It's saying foreign company also whose board of directors, managing director, manager is accustomed to act according to the advice, direction, or instructions of the director. So my company, my director, manager is giving the advice to the board, a body corporate of the board of directors of the company. So there's a foreign company whose board of directors are acting as per the instructions and advice given by the directors of my company. Then that body corporate and my company, we are. And if any person, I gave you the example of Ratan Tata, who is giving the advice and directions to Tata Motors, then that will also be considered as the related parties. Any person wise, if you're talking, then he will be considered as the related. However, any body corporate which is holding subsidiary of a holding investment company, then they will also be the related parties, all the directors and their relatives. However, this is what I wanted to show you, that this clause is not applicable to private company. This is a new notification that they have come up. And this example number 9, they have specifically given you about this. So you must read each and every example given in the study material because it has a reason behind it so that you can practice more and okay. Now, this is a very interesting example number 10. Let's try doing it. XYZ is a public company and it has two subsidiaries, Y private and Z private. Can Y and Z said to be related parties, children? Yes, ma'am, or no, ma'am? Jaldi batao. Can these both be called related party? Kiran Mishra says yes. Yes, yes, very good. Why? Because they are deemed to be the subsidiary of a public company, you deemed to be a public company. Therefore, now you can be a related party. Otherwise, private companies, they're not, this clause is not applicable. But once you become subsidiary of public company, excellent, all of you have given yes. Very good, children. Excellent. I hope you have not cheated the answer and then do. Huh? Good. So related party is finished. You have done it. You have done the question also. Relative definition is clear. Remuneration means the money that is being paid to you for your services. Page number 1.25, the calculations below example 12. Okay, Swati, we'll just go to that page. I think we're just going to come to that page only. Share means the share in the share capital. Small company we have done. Okay, let's do this question. Swati wants us to take up this question. ABC Limited was registered with the registrar. Authorized share capital is 2 crore, where each share is rupees 10. So there are 20 lakh shares of rupees 10. In response to the advertisements made by the company to buy the shares, applications has been received for 10 lakh shares, but the company actually issued 7 lakh. So authorized share capital is the maximum amount that the company wants to raise, 2 crore, 20, that is 2 crore, sorry. Subscribed capital is how much? Number of shares have been subscribed by the public. So it's fine. Subscribed capital is 1 crore. But actually issued 7 lakh was your issued capital. Company actually. So applications have been received, but the company will decide now whom to issue. Prospectus chapter you should have done by now. So applications have been received, but the company actually issued 7 lakh shares. And the called up money was rupees 8 per share. That is your called up money. All the calls have been met except the 3 shareholders who still owe their 6,000 shares in total. So 6,000 into 8 has been subtracted because it is the calls in arrears. So I told you called up money. So authorized share capital maximum limit. Subscribe, how much the public have subscribed to. Issued, how much the company has actually issued, 70 lakhs. How much was called up? Out of rupees 10 per share, only rupees 8 per share. Application allotment money, first call, second call, remember? Accounts chapter. So this much money has been called up. Now, actually, how much has been paid up? 3 shareholders who still owe rupees 6,000 shares in full. So you have deducted their calls in arrears. This is the balance share capital amount. This is the paid up share capital. Okay, I hope this is clear now, Swati. Yes, it should be authorized share capital, subscribed and issued, and nominal is generally used side by side. So that is correct. So subscribed capital and then issued capital, then called up and then paid. Okay. All right. So sweat equity shares also is part of your share capital where you learn about sweat equity shares. These are the shares given to the shareholders for whatever, as a know-how or value additions made in the company, issued to the directors or employees at a discount value. So sweat equity shares have the entire procedure. So you can basically learn this definition from that particular chapter only when you do in discussion about SR needs to be passed, authorization is required, all those points. Turnover. What is the meaning of turnover? The gross revenue that you have earned in the profit and loss account for the distribution of the goods and services. Okay. Unlimited company means a company not having any limit on their liability of its members. You have unlimited liability means your liability is not limited to any. Am I audible, students? There's some misconnection in between. Voting right. Voting rights means the right of a member of a company to vote in any meeting or by means of postal ballot. So what is the meaning of votes? You all went for votes recently if you're above the age of 18. So you know how the voting is done. So here, voting right means when you're a shareholder, certain rights have been given to the member of the company that they can come and vote in the meetings of the company. So when you refer to the chapter management and administration, there you get to learn a lot about how the voting rights are exercised. Om Krishnam is asking, is the ESOPs and sweat equity shares same? No, ESOPs are employee stock options that have been given to you, and sweat equity shares are given for basically sweat equity shares are for your hard work that you're getting, for your sweat that you are giving to the company. You are being given additional shares. Okay, so there is a difference between both of them. Okay, so I think we have almost finished all the definitions and we have done it well in time. So that's great. Let me just flip through the pages if anything else is left, or we can just take up certain MCQs so that you have a quick revision of that as well. 1% company children, OPC's definition is the only person who is running the company and nominee has to be appointed. So you should learn this definition from the chapter incorporation in detail. Net worth. Okay. Example number 6. Let's discuss example number 6. It's very interesting. Okay, Stuti wants to ask something. So I will give you time to unmute and then you can ask. Daughters are members of HF. Yes, daughters are included. Stuti is asking question related to relatives. Daughters are members of HF or not? Daughters, yes, daughters are included. But a stepdaughter is not included under the definition of relative. Okay. So the statutory example number 6, we're going to solve. Statutory auditors were required to issue a certificate on the net worth of the company, and they have computed the fair value of its properties and plant and equipment, which was mistakenly taken into retained earnings. So revaluation of assets have happened up, and they have taken this value in the retained earnings. Can we say the fair valuation has been done? Yes or no? You have to tell me, children, whether the fair valuation has been done in this case. Yes or no? What will be the correct answer? If the company has taken the revaluation of reserves, no. Why? Because Shrishti correct, Khushbu correct, Om correct, Shankar correct. Is excluded. I taught you two things are excluded from net worth. One is revaluation reserve. All the people have given the correct answer, no. What is the second thing which is not to be considered in net worth? Excellent, Stuti. Revaluation of assets and write back of depreciation. Om Prakash, Om Shri, Om Krishnam. Very good. Write back of depreciation and amalgamation. Good, good, good. Srishti, all of you are correct, children. Very nice. Very good. So with this, we come to an end of your syllabus, and you can just go through the MCQs and the descriptive question also given in the study material. I think there is only one descriptive question which has been given for your practice. The MNP Private Limited question is related to small company. We have done this similar kind of question presentation also. Any doubts, children? Now it's an open forum for doubts. We still have 5-10 minutes. If you want to ask your doubts, you can ask your doubts. You can raise your hands. Khushi is asking, in case of a deemed public company, can it open up the securities? So, child, a private company, when we say that the holding company is a public company, it shall deem to be a public company, but it continues to be a private in its articles. Means in its articles, still those three restrictions follows. That is maximum number of members 200, prohibition on inviting the securities, and restriction on the transfer of shares. It still continues to be private by heart, but for the compliance and all, it will be deemed to be a public. Okay, Om Krishnam, let's see. I will be taking up a few more chapters with you, so don't worry. What is special resolution? Arun Jain, this is your question of management and administration. I'll answer you in detail over there, but generally for understanding basics, whenever the meetings of the companies happens, we pass two type of resolutions, ordinary and special resolution. So there are two types of businesses which are interacted at the meeting of the shareholders. For ordinary businesses, there are few cases, and for any special businesses, when we are doing, we pass a special resolution. So it is the decisions basically taken by the directors and shareholders for certain kind of activities happening in the company. Okay, any more questions, children? Anyone wants to ask something? You can raise your hands. We have otherwise tried to solve all the questions in the class itself. So Khushi, I hope your answer is clear, because they cannot invite these shares to them. They cannot go to the public. If it's a private company, once you go to the public, you become a public company. So Khushbu, if any such kind of questions are asked, then you have to always write the provisions of the Act as per the provisions of Companies Act. Even if you don't remember the sections, you can simply write down as per the provisions of the Companies Act and define, give the definitions of certain kind of things that they have asked, or whatever is the provision of law. Then write to the facts of the case and then give your analysis and conclusion. Okay. Shankar, for this, you have to ask the admin about the next class. So why don't we just take up the MCQs since we have time? Abhilasha and Amrita have incorporated a non-profit private limited. So it's an NPO which is registered under Section 8. One of their friends has informed them that the company can be categorized as a small company because their profits was and its turnover was less than 40 crore and paid up share capital is less than 4 crore. So that's fair enough, right? It's if it is a private company and if it is having it's a private limited company, that's good. And it's having a paid up share capital and turnover less than 4 crore and 40 crore. So what do you think? Can we consider it as a, first of all, my question to all of you is, can we consider it as a small company? Very good, very good. Excellent. Small companies not applicable to Section 8 companies. Excellent. Section 8 company, which means the criteria of turnover in the last can avail the status only if it acquires at least 5% stake. Minimum 5%. Status cannot be bestowed upon. So C is the correct answer for this one. All right. So these kind of questions can come in the exam, children. You have to read it very carefully. Let's try doing another one. Green Limited is incorporated on 3rd January. What will be the financial year ending for this company? For the first one, give me the correct answer. When does the financial year end? So 1C is the correct answer, 2024, because if your company is incorporated on or after 1st January, then the year following the next year. Roma, along with the 6 friends, were incorporated in May. The paid up share capital is 2 crore. Further, she noticed that in the last financial year, turnover is 40 crore. Can it be treated as a small company if its paid up capital is much below 4 crore and turnover is not exceeding 40 crore? Small company is applicable only to a private company or OPC, and therefore, despite it as being a public company, cannot enjoy. Unlike a private company, which is automatically a small company, it is being treated as public, has to maintain the norms of small company for continuously 2 years. Children, have you studied point C provision anywhere? So 1B, second B is correct. Okay, because it can, you should read these lines very carefully. Examiner can ask you questions on these. That there was a continuously 2 years provision. It is never like that. Okay, so you have to ignore such things. Another one is in the next 2 years cannot be treated. So these kind of provisions were nowhere mentioned. Is that clear, children? Absolutely correct answers given by all of you. Any more doubts you have, children? So you have really very well understood, and it seems you have learned the task also very well. So if you have any doubts, you can ask it. Thank you so much, Om Krishnam. Thank you. I'm glad to read this, that you have enjoyed it, and it's a conceptual session. Thank you so much. Thank you, Stuti. Thank you so much, Beta. And those on the portal also, I hope all your queries are answered, child. Bhumika, Devyanshi, all of you, Jayashri. Thank you, children. Thank you so much, children. So there are so many wonderful thank you comments. It seems that you don't have any queries. And I'm glad. All the best. Please keep studying well. Keep revising. Thank you, Abhishek Singh. Thank you, Yamini. Thank you, children. Pooja, Sunil, Kiran. All of you. Shankar, Khushbu, Deepa. Good. Well done, children. Thank you, Aditya. All right, children. Thank you so much. Thank you for this wonderful session, and look forward to see you again soon. All right. Thank you, sir. Thank you. Thank you. Yes, sir, because students don't have any more queries. Everything is done. Yes, sir. Thank you so much.